So I was very grateful to be asked by Finance Magnates to host this panel. It's an area that I've got a bit of experience in. So for the last 5 years, LiquidityFinder has really been set up as a venue or a marketplace for retail brokers to find B2B liquidity providers that can help them run their business. And we get a lot of startup retail brokers coming to us asking, for some advice about B2B. And quite often those retail brokers develop their business to the point where they go into B2B themselves. And so I suppose on that basis, I was asked to host this panel, which is very good. But I think it's probably best now to introduce the people who are on the panel. Can we start with you, Youssef? If you just give a couple of words about, what business you run and where you are.
Pleasure, Sam. Thank you. I'm Youssef Bouz from GCC Brokers. We are a FX broker. Originally, I would say we started as a B2B broker, mostly with corporate clients, and eventually we also grew into the retail space, and now we accommodate for both. So this is going to be an interesting panel, and we have a lot to share.
Andrew.
Thank you, Sam. I'm Andrew Morgan. I work as CPO for MahiMarkets. Been there for most of my career, and before that, a bit of investment banking. At MahiMarkets, we've got a kind of variety of perspectives. We work with sort of retail brokers, B2B brokers, prop firms, exchanges, and even market make, and sometimes on behalf of clients and our own capital. So some of the stuff, hopefully, we can. Some of the advice and the different perspectives in trading we can speak about today.
In what respect do you work with these guys? Is it really risk management?
So it's pricing, risk management, algorithmic trading, and also market making, whether it's on exchanges, things like that. So.
Thank you. Mustafa.
Thank you, and pleasure to be with everyone here. I'm Moustapha, Chief Commercial Officer at B2 Broker. I come from the enterprise big tech. Covered the financial services industry for the last decade with the likes of Salesforce and Oracle, now with B2 Broker. B2 Broker, we are a global multi-asset liquidity provider offering prime services and an end-to-end technology infrastructure for institutional and non-institutional clients. My role sits at the intersection between commercial, technology, and operations, which are three key elements for any retail brokerage that want to step into the B2B game, and hopefully my insights and exploration will be helpful. Thank you.
Thank you. John.
Hi everyone, my name is John Light and I am Head of Product at DevExperts. DevExperts has two kind of major arms. The first is as a software provider, and we build software for banks and brokers, trading platforms covering FX, CFDs, crypto, as well as exchange-traded products connected to markets for futures options. We also have a data division, so we can provide market data. So we serve a lot of these brokers, and we kind of see the requests that come in, especially when they want to move into the the B2B space.
Thank you. Alex.
Hi, Sam. Good afternoon. My name is Alexandros Patsalides. I'm the Vice President of Institutional for GTC Group. GTC Group is a multi-asset group, and we provide retail services through GTCFX. And we're also within the institutional space providing services through GTC Prime. Like my colleagues from the industry said, I also sit within the intersection, making sure that, okay, there are good things happening within the institutional space for the group. And I'm very, very happy to be here. Thank you.
Thank you, everybody. So just a little bit of, just going to share some of my experience. So when I started LiquidityFinder in 2019 is when we went live. We had 5 of the big names on the site. And without going into too much detail, at around about that time, it seemed to me that there were only really 5 to 10 B2B brokers out there which were supplying the whole market. And I've noticed in the last 5 or 6 years that B2B segment has grown tremendously. We now have on our site alone, we have about 40 names, if not more, and there are a lot more out there. So the market has really expanded in terms of the number of companies giving B2B services to retail brokers. And one of my concerns that I'd like to raise in this panel to start off with, is there still an opportunity to go from being a retail broker to being a B2B broker? Is the market not necessarily saturated, but it's certainly very crowded? And if we accept that it's a crowded market, is there the demand to match the ambitions to be a B2B broker? How much of an opportunity is there? And how do you maximize that opportunity if you are going to go into B2B? Now, it seems to me that retail brokers who develop a very sophisticated large operation quite often want to manage their own liquidity themselves. And so they get to the point where they probably end up having a tier one prime broker, and they can become a lot more in control of their own liquidity coming to them. They're not dependent on a B2B liquidity provider anymore themselves, and they have the technology and the liquidity to then supply their own retail brokerage, but then they can use that to supply other retail brokers and help them nurture and grow and so on. How many retail brokers are there that need a second or a third liquidity provider? But I'm just going to go around the panel and just say, do you see that the market is saturated? Is it crowded? Is there still room for more companies? And if you are going to be a company in this space, what do you really need to differentiate yourselves? I suppose those are the main themes that we're going to cover. But do you still see opportunities for others in this space, or do you think it's really crowded?
I think there's still plenty of opportunity, but there is a lot of wrong out there. Not everyone should be copying what they see. A lot of brokers just think, oh, this guy can give liquidity, so let me try to do it too. But the reality behind it is that they have no idea what's going on. They don't have the right setup. They don't have the right technology and tools, right strategy to actually facilitate being a B2B broker and giving liquidity and an institutional offering to clients. So a lot of times this creates uncertainty. It's the wrong people in the space, and this is what's kind of leading to saturation. It's definitely a really nice space, and especially if you have the right conversations with the right people who understand the market and the conditions and aren't just spoiled and asking for unrealistic things that shouldn't be in the market. There's still plenty of opportunity for the B2B space, and there's definitely a need to kind of clean it up, filter, because not everyone should be in it, but with the right setup, the right facility, you should be able to.
Well, Youssef, thank you. I think that's one of the things that we will look at a bit more closely, is when you say not everybody should be in it. We'll get into that in a bit more detail a bit later on. But I'm going to jump straight to Alex again, because these two guys here are from brokers themselves, and they're at the coalface, dealing with competitors, dealing with potential clients, and hearing what those clients are saying about their competitors and so on. How do you find it, Alex? Are you finding the market full?
Actually, the market is crowded, but what we do see from our side is that, just like my colleague Youssef said, there are lots of copycat liquidity providers which just provide a Me Too service. If you're going to do something, you might as well do it to the best of your abilities. You need to find a niche, you need to capitalize it properly, and you need to have the right people, the right processes, and the right systems in the mix in order to make sure that it works. If a retail broker decides to go institutional and the only thing that they know is B2C, then unless they get the right people, unless they are very good capitalized and they have the right counterparties to support them in their journey, then they will fail. And I have seen this happen time and time again. So yes, the market is a bit crowded, but like my colleague said, Youssef, a filtering is happening. The market will actually reject those liquidity providers that are not meant to be. Hence, it's up to us, the proper liquidity providers with proper governance and proper systems and the proper people left to make sure that we the market is properly cared for.
Thank you. Andrew, you're in a slightly different space in this sector from the technology side and the risk management side. How do you see it? Is it overcrowded, or are there opportunities?
I think there's definitely still opportunities. It is also overcrowded. What I'd be really careful about doing is trying to differentiate what you're doing from other providers. I think if you just do the same old, just get a bunch of LPs, aggregate them, send them out, you're not really differentiating your services to the market.
In that case, the only thing you can really differentiate is on price.
And we are seeing that, and some people, particularly in gold, that the spreads are really coming in and certain providers, and you have to wonder, do you want to race to the bottom? I think there's definitely opportunities, and I think there's also depends on your asset class, depends on your niche, your focus, the style of liquidity you want to make. Crypto is coming in, you know, there's definitely, that's less crowded. Gold and getting tighter and tighter, definitely there's plenty of participants in that.
Moustapha, how do you see it?
Well, the market isn't saturated. It is crowded, to the gentleman's point.
Sorry, is or is
It's
not?
not.
Is not saturated.
It is crowded, and it's unfiltered. Why would someone step into the B2B? Usually, they think of it as and what I'm hearing from clients, as it's a marketing extension or a revenue stream. And this is where they get it wrong. It's not another revenue stream. You're stepping in the business of servicing, and you need to be ready in a full ecosystem. Platform is the easy part. Technology is 10%. But webbing a service behind it and the right teams and the right service, what will I do to service a client who has downtime at 2 a.m.? Am I prepared for it? It's not only about spreads, it's not only about having a nice logo on a white label and going out there and telling my clients, now I'm going B2B. It's about what will you do to sustain this? This is why 2 years ago, there was a lot of names on the market. 48 months later, today, half of them are not. But there are others trying and trying. Infrastructure is key. Platform is a complementary, and white labeling is complementary to a good infrastructure with good people and good servicing. That's how I see it.
Okay, thank you. John, can I just ask you to answer the question, is it saturated or is it crowded or is it even not crowded?
I would say it's definitely crowded and saturated from where I stand. Like you see so many people offering the same thing, and really differentiation is key. And my background, actually, a long time ago, I was working at CFH Clearing, and we believe we invented the term prime of prime back then. Like we were one of the first to do that. And now you see most people in the room are doing the same thing. The technology that most retail brokers have with the from the bridge providers, it's relatively easy to offer like a fix output, and everyone thinks they can do it, and they're kind of going around regurgitating the same liquidity, and really the successful guys have either really unique offering, great support, but also they differentiate by going into new areas. So we have clients we see at the moment offering perpetual futures. You see these guys in the US that are moving into B2B services for event-based contract pricing and things like that. So really being ahead of the curve and having some niche rather than just doing something because you happen to have the technology from your retail business.
Thank you. So I think there's a consensus that the market is certainly crowded. There's a debate as to whether or not it's completely saturated. And so the next question is, or the obvious thing is, how do you differentiate yourself in this crowded market? And we had a couple of calls before this panel, like over the last 2 or 3 weeks, to discuss these sort of ideas. One of the ideas that I was suggesting was that instead of obviously reproducing the same core market pricing that everybody else is doing and adding a spread and then lowering your fees and all that sort of stuff, can you create a distinct price from perhaps even your retail client base? Because every retail broker has a pool of clients that they can use as another pricing source that can go back out to their B2B clients, but you need some sophisticated kit to do that. It's not just a question of reproducing all the main market making banks and so on. If you can add some unique flavor back out to the market from your own retail base, then you have got something that's different, because you've got a different risk pool that you can actually price from. And that's where I think people like Mahi and maybe B2Broker and other names out there can add some kind of value to the retail broker. But I think the consensus is, if you're going to come into the B2B space now and you're a retail broker, you're up against some people that have been doing this for a long time, and that's their focus. As an example, Finalto. I mean, they've been doing this for a long time. And these guys know all the ins and outs already. So you've got to have something very, very unique to compete on that playing field. What would you suggest going around the table now? What are the opportunities? Where can you differentiate? We're not going to talk about pricing. We're not going to talk about spreads. I mean, things like customer service. I mean, Youssef, you're a transparent A-book broker, and this is all a big differentiator, right?
Exactly. I wanted to lead with this. So it seems like we're all on the same page. We all share a mutual opinion about the topics we discussed. One way is differentiating price, yes, but it's not enough. It's not enough. We are a full STP broker, so we have a lot of challenges with this. We work with tier one prime of prime LPs. We have a lot of spoiled clients who, when they see widened spreads, when they see slippages, they have to complain. But this is where we need to actively differentiate in our support, in our education, teaching, and helping the client understand why it has to be like this. Why I can my offer comes this way, but this other broker can give you what you want. But unfortunately, the two things we talked about are differentiating and filtering. Filtering is happening, and it's going to take its time, but filtering always comes with a price, which is the client is suffering. I've had too many of these conversations recently. Unfortunate situations. Clients come after they took the hit and they finally want to understand what you're speaking about, what you tried to teach them before. All about these certain conditions. Why I can't give you request price with no slippage. Why I can't give you zero spread on.
Can I probe you a little bit further on that? What are the experiences that these people have had elsewhere? Can you just give me an example of what might have gone wrong?
Clients have been trading with broker X for a while. Everything's been good. They've been getting the fantasy conditions they want to work with. And then suddenly one day, they're not able to withdraw anymore, or the broker wants to close their account, or wants to deduct some unrealistic fees for some reason, which is not justified. Many of these stories. We just had a summit in Dubai, affiliate summit, a few weeks ago. All the crowd was partners, introducing brokers, affiliates, influencers. So all of these are people who work with a broker and refer clients. A lot of them were coming there complaining how now they are running away. The last few months, the market has been crazy. We've all seen it and lived it. And unfortunately, this pushed the filtering process. This made the stories start becoming louder. So this is feedback from clients, from people who came and sat with me at the booth.
So if we hone that down to one thing, we're talking about creating an environment of trust. Is that what we're...
Trust by explaining and making sure the client is understanding why I'm telling you I can't give you swap free on your trades, because I'm full STP. I'm filling your. I don't mind if you profit, if whatever. Our slogan is kind of trade your way. I don't want to restrict you as long as you are doing healthy trading. There's nothing wrong with it. Do what you want. I'm on the same team as the client. I'm not against the client.
Okay, thank you. And we're going to go around one by one and ask,
Actually-
what would you suggest would be a differentiator? Alex?
Actually, if I may, I'd like to take the baton. I understand what you're saying and I agree with you, but it all has to do with why and for what purpose the liquidity provision department started. For example, in GTC Group has GTCFX. GTCFX is a big retail broker, okay? We're doing a lot of yards and we're helping many, many people. Now, the need for GTC Prime to exist came from the founder itself, Jack. He remembered how difficult it was to get started when they got started, and nobody was helping, and the prices were so high and through the roof. That's the sad truth. When you're new to the market, nobody's going to help you. They will try to make as much as they can from you, and this is true. So, with that being said, Jack set up GTC Prime, not for gain as such, because we are making money on the retail side, but to help. And the reason why I jumped in, Youssef said that there is no such thing as swap free. I agree with you. Until I came into GTC Group, because GTC Prime does give swap free, but we bear the cost. So we're differentiating something in the market, the same way that we're having and adding new asset classes that are not available in the market, okay? So we're trying to help our clients in the best possible way. Do we get hit on that? Yes, we do. Do we get loyal clients? Yes, we do. So at the end of the day, it's all about management and what is the decision and what is the strategy and what is the outcome by setting up the institutional department. So
It's good input. I think innovations like that, so you're bearing the cost of swap free, is a differentiator.
yes,
There's a campaign at the moment, another broker, a very big name in this space, that's offering interest on the deposit accounts. That's another innovation. So these kind of thinking outside the box approaches to this to be a differentiated product is extremely useful for the market because it's adding more products to the market which weren't there before. So everyone's competing, and I've got to let Andrew have his chance now to say what he feels could be a differentiator.
So I think one way you can differentiate is by understanding who you're making a lot more. So if you're able to understand the liquidity, you can give the best possible price spreads, execution, and all of that kind of stuff. You can get a lot of trade volume by being incredibly tight in gold and onboard a few hedge funds. You'll get absolutely shed loads of volume. What we kind of look at is do a lot of like offline analysis where we understand, try to look into trading behavior of various people who are onboarding via the B2B so that we can best characterize what's the best risk management strategy, what liquidity we should offer them. And we want to be as competitive as possible. So a lot of what we do would be to, rather than risk capital up front and learn by doing, do we want to take a look at data, see what story that tells to appropriate, give them the right execution and liquidity. I think that's useful because what we're seeing at the moment is a lot of mismatched application of way too tight to people who don't deserve it, and vice versa.
Thank you. We actually don't have a huge amount of time, but Moustapha, if you could just
Quickly,
suggest
yes.
some differentiators.
Very valid points. I agree with the gentleman. What I learned and what we do at B2 Broker is we have a North Star, customer experience. That's our differentiator. Being focused and price-centric is part of that. But also, we are very customer-centric. Even when the prices maybe that are offered, maybe the clients don't like them or he's negotiating. But when I offer him a 24/7 multilingual support anywhere in the world to call me and for me to help, that's a customer experience that is a differentiator in this industry where Youssef talked about, Alex talked about trust. Youssef talked about technicalities in operations. Andrew talked about finding better prices, but all of these touch points fall under one umbrella, which is customer experience. Now, how can I make you as a B2, as my client, to make more money? Not only how I will make money. And this is what we really focus on at B2 Broker, and shifting the tone from liquidity spreads and these details and pricing to a consultative approach to educate, like Alexandros and Youssef were saying, but also to take the clients and their clients to a better place. Setting this motion takes us back also to answering the first question. Is the market saturated? No, it's crowded. And this is the differentiator that will make a retail broker strong in the B2B space. It's just not for the weak, and it's not for people who want to gain on trend or bring revenue. It's an ecosystem that has a customer experience at the North Star and shifting that tone from price centricity to customer centricity.
Okay, thank you, Moustapha. John.
Yeah, I'll be quick. So yeah, number one is trust. So every B2B broker in the space is going to be saying the same thing about their spreads and liquidity, but the underlying brokers taking that needs to know that there is trust there. But also there's a big a big relationship play here. Like people think that B2B sales is based on tick boxes and everything that's there. There's a massive amount of it is who people know and what they trust and the relationship that they have with their clients.
That's very true. Just on that, it's interesting that it seems to me that the value of an institutional salesperson at the moment is actually going up and up and up because people are competing for the same people to come and work for them. Anecdotally, recently I've heard a few people competing over the same teams that are going from one company to another. So actually the cost of doing this is going higher, but actually you're going to need to invest in these people if you're going to make it successful. You can pay peanuts and get monkeys, or you pay premium prices and get premium business. Moustapha, sounds like you want to say something. No, sorry. So it's just anecdotally, the cost of the manpower needed or the women power needed to run this business successfully is getting higher because it's a competitive market, right? And that's probably why they paid Alex a huge amount of money to go to GTCFX. I shouldn't say that. I don't know for sure.
Not enough.
But in terms of, there are other market opportunities which are arising as well. Relatively new markets like, well, I say relatively new, but the funded trader market is another opportunity for the B2B space. And I think John and Andrew in particular have, I'm not sure about Moustapha, but have experience of working with that sector. And my view is always that funded trader firms don't send a huge amount of volume back to the market. But John, you corrected me on that recently.
Yeah, it's true that most, for those that don't know, the funded trader piece here is where when you have a trader that's paying for a challenge account, and if they pass these challenges, they get a funded account. And these challenge accounts is purely simulated. So we have a lot of these prop firms using our software. And normally it's kind of around 5% of those traders pass the challenges and then get a funded account. A lot of the time, those funded accounts are still simulated accounts, but there are some prop firms that give them live accounts, and it makes it even harder for these prop firms to get good liquidity because they have all of this flow. The B2B service providers, know that they're making a lot of money, but they're not going to give them the best liquidity and the best service because they're only going to get a tiny amount of that flow coming through. So it's an interesting area, like. How do you deal with that? And I'd be interesting to hear from the other panelists, like what their offering is to prop firms, considering they know that they're going to get a tiny amount of the flow, and that the traders that are coming on that flow are probably quite, their experience.
There's also been an ongoing issue in the retail side as well, because not many retail brokers send 100% of their flow back to their B2B liquidity provider. And I hear anecdotally it's anywhere, if you're lucky, 20%, but it's usually like 10% of the flow, and it's usually the more challenging flow. So you've got to be prepared for that as well. I mean, the market for liquidity provision is much smaller than the size of the market in the retail space because only a very limited amount of it, and it's usually the very challenging flow that's sent back anyway. I understood from speaking to you guys on the phone last week and the week before that the funded trader side is actually there's more volume than I thought. I didn't think there was any volume going back to the market, but it's actually more than I thought. So there's an opportunity there. If you can service that sector well, that might be an opportunity for you. Are there any other developing sectors that we may not be considering here that might be an opportunity? Alex?
Actually, I want to say something. You kind of like open Pandora's box. So I'm going to give you a bit of preview of what is going to come in 2026. Now, in 2026, could be Q1, could be Q2, we're getting ready to offer a new service as GTC Prime to prop firms. We will help them with the funding process in a specific way that will allow them to give live accounts to the selected few that deserve to actually trade on live accounts. And we've been working for quite some time on that. And you will see that happening in 2026, Q1, chances are. The other thing I wanted to say, Sam, you said about 20% of challenging flow. Yes, fine. Now, depending on your risk appetite and capacity, you might be able to take that flow because there are liquidity providers that they can deal with that flow. Again, this is a differentiation.
Do you mean like a revenue share model?
No. I'm talking about a toxic flow, okay? Something which is really, really toxic for someone and they want to get rid of it. Now, getting rid of it is not the right phrase, but if that so-called toxic flow, challenging flow, coming from a retail broker can be passed on to a liquidity provider, because chances are lots of liquidity providers which will reject that flow because it will harm their bottom line. We, as GTC Group, GTC Prime, we will be able to accept that toxic flow, hence another differentiator why we go out and help the smaller brokers and the medium-sized brokers in order to get on their feet.
That's very interesting, Alex, but it begs the question,
if I may add,
how are you able to take on that toxic flow? But I presume that's...
I'm more than happy to answer the question, because we have very, very good counterparties, prime of prime and tier one, and we will selectively send that flow to whichever one is best suited for. That's how you do it, by providing the best service for your clients.
Do you know, I love hearing about these sorts of differentiators because it makes my job a little bit easier. If somebody comes to me and says, which LP should I use? Where do you start? 40 B2B names on LiquidityFinder. And I love hearing about these differentiated little products. So, and they may seem like small things, but they can have a really, really big impact on an underlying retail business. So, Andrew, have you got something to add?
I would say is that sometimes it's not just about choosing your LP and then clearing your risk. You might actually want to work that passively on exchanges, being able to work it sophisticatedly using algorithms and stuff that doesn't have as much market impact. So I think there is a way of dealing with some of that toxic flow without just making it someone else's problem.
Yeah, very true. Now, one other thing that I'm noticing is that the traditional, we call it TradFi, but the traditional broker is moving into crypto, digital assets, and the digital asset space is moving into the retail broking side or the institutional broking side, and everyone's converging because they're looking to be as multi-asset as possible. And if you don't really have that covered, if you're not going to go to market with the full suite of asset classes, then you've got to have something that's absolutely unique about one of those asset classes, which could be a fantastic gold price. It could be, as you're talking about, managing toxic flow. So there is an alternative. If you're not a full suite multi-asset broker covering digital assets and traditional assets, then maybe choose one particular field and be excellent at that. And I'm hearing some people have a very strong gold product, for example, or it could be that they have, I don't know, a very good price on some other commodity which they found a niche for, or they've got a good gold cross price against some exotic currency pair. So those sort of things are the way to compete if you're not going to be completely 100% multi-asset.
Sam, I just want to say one thing. So I like you, I also have a lot of brokers coming to me asking for recommendations, and we quite often send them to Sam. But one thing that I see is a bit of a differentiator in this space is the regulation that the B2B broker would allow. And you have these brokers that are setting up in Vanuatu and other offshore locations. So my question to Alex and Youssef is like, where is that line? What type of client do you allow to come through?
That's a very interesting question as well. I mean, a very, very valid point. So there are some brokers that come through our door, let's say, looking for a home. And we just know there's no point passing them to certain names because they just won't accept them. They have to be of a certain threshold in terms of regulatory, on the regulatory ladder, let's say, before they'll even get looked at. So if you are prepared to take more of a risk and price in the lesser jurisdictions, that's another opportunity. And I think it's quite nice here to look at where the opportunities are, rather than just saying it's a crowded market, all the doors are closed. There are some certain niche things that you can offer. Even as an example, nurturing a retail broker that you want to price all the way through the regulatory process, where to get their bank accounts from, even offering them some advice on marketing. So that kind of thing works very well as well. If you're looking to go into the B2B space, offering something that's above and beyond, like a full wraparound service, which is, I think, what B2 broker specializes in. It's very challenging for new retail brokers to find banking services, generally speaking, or payment services. If you've got established relationships with those firms, you can perhaps share those with your clients. So it's not just about the pricing. It's going back to the point about full customer experience. So I think the thing is, I mean, as a general view, it's a crowded space, not yet saturated. There are people who are leaving the space because they haven't succeeded, as Youssef has alluded to. But my advice would be,
Sometimes not by choice.
Sometimes not by choice. Exactly. And some of us know about these things that happen. But choose a specific niche and market that niche and be a differentiator, like we've heard some examples here today. But we've got 5 minutes left. I just need to ask if anybody has any questions specifically for anybody on the panel. Now is your opportunity. If not, I've got a few more questions to ask, but please do feel free to stick up a hand if you have any questions. Okay, so can we just, time goes very quickly, and we've got a few people to go through, but what would your advice be to a person that came to you and said, should I set up a B2B site to my retail business? What would your advice be in a nutshell?
Take your time, don't rush. Make sure you have the capital, make sure you have the right facility, the right technology, the right team to support and take care of this service. And then when you are confident you can facilitate all this, you can go ahead. Otherwise, don't rush.
So it's something you really need to think through first. Okay, thank you. Andrew?
I would say, I'd examine your network of who you plan to be a B2B broker to, and your ambition, how well capitalized you are. Doing a small B2B offering, very different than something that's multi-regional co-location with different exchanges, different ambitions, different problems. So I think there is plenty of opportunity. Things like weekend trading, the markets are doing extended hours now. So I think the market is changing to becoming more 24/7.
Sorry, yeah, just on that point. So another thing I'm hearing is that there are some retail brokers who are offering crypto, but it's only 24/5. If you have the capacity and the ambition to cover the weekends as well, there's an opportunity there. So 24/7 crypto pricing could be another differentiator, because most brokers I'm speaking to don't want to go there because it's too much.
I think people, why should you wait until 9 a.m. to go to the bank? People just want to trade all the time. They get an idea. Trump is actively posting on social media on the weekend because people have the attention. People want to follow that on with trading. So we are 24/7 market makers. So we're able to update systems during the weekend. That has a whole different kind of kettle of problems is working on the market.
It's a whole other level of investment as well to have weekend staffing and risk management and all that sort of stuff.
100%. You have to be automated. You have to have the right staff. You have to have, it's different market conditions.
Yep. Moustapha, if somebody was to come and ask you, shall I open up a retail broker? Obviously, you're going to say yes because you have all the services to offer them. But what would your advice be to do it successfully?
Come to us and we'll make you successful, of course. But on the side, don't make it for marketing. Don't make it to be the new cool kid on the street. Take this very seriously. Make sure the infrastructure is in the right place, the technology is in the right place, and the people that you have are in the right place. The assets that you have are compliant, legal. You know what you're going to the market with because we're in serious business. And your reputation as a retailer, that name will be hurt if you don't do B2B correct.
And also, the other thing to add to that as well is, just popped in my mind, risk management, because once you start pricing another company, you lose sight of your customer. There's another layer of anonymity between you. Obviously, you can have tags and so on. Where the trade comes to you can identify some tag names, but there's another level of responsibility for managing risk, which wasn't there before, perhaps.
Exactly. And separating the books, the architecture, because the retail clients now will look at you as a B2B provider, and you don't need to have a conflict of interest. And when you lose that trust, you will lose both games, retail and B2B. So take it seriously.
Thank you. John?
So I'd say the technology is the easiest part, and really review the business case. To be a differentiator, you're probably going to have to do something quite risky, like go after clients that are in offshore jurisdictions, new markets, new instruments, asset classes. And then once you have that and you want to go forward, you need to go and hire a superstar team of salesmen that are well connected.
Thank you. Alex?
Right. I agree with each and every one of the gentlemen who were before me. The only thing I'm going to add is a very critical question. The founder and the management of the retail broker, they need to ask one fundamental question. Why am I doing this? What do I expect to get out of this? Am I ready to deal with this? It's extremely difficult to shift the mindset from from retail to institutional. It's a completely different kettle of fish. You need to have the right people. You need to have the right systems. You need to have the right risk management and risk appetite to go after the institutional business. And you need to know that if you do go in, all in, you have to go all in. There are no second chances. If you fail, the market is going to chew you and spit you out. That's it.
Very wise words. And thank you very much. We have 4, 3, 2, 1. Perfectly timed, gentlemen.
Thank you.
Very
Thank
much
you,
for
everyone.
all of your contributions. Thank you.
Thank you.
Thank you.